E-commerce. When talking about e-commerce, it's usually all about innovation. It's about the growth potential. And this, especially what's true for B2B, where we have seen obviously a tremendous shift from offline to online in the recent years. And succeeding in this era of digital transformation and online growth um, is obviously also about building the right value proposition for customers, but even more so about establishing the ability to scale. And this is usually the outcome of close collaborations between like-minded partners. So having said this, I'm very pleased to share the stage today with William from one of our most valuable partners, Qogita, and talk a little bit about how we teamed up to support Qogita in their mission, to deliver and execute on their ambition to create one of Europe's, leading B2B marketplaces. So the two companies have been on stage here already last year, but given so much has happened over the past 12 months and we have seen so much traction, we thought it's a good idea to come back and tell you a little bit more. So my name is Axel. I'm Chief Strategy Officer at Mondu, and I'm very much looking forward to our session. We'll try to keep the presentation short to allow also for quite some Q&A. And it's my pleasure now to hand over to William to introduce himself and talk a little bit about Qogita.
Yep. Hi, everyone. So I'm William. I'm the Chief Technology Officer at Qogita, and very much involved all the teams that come together to kind of build a web platform. So whether it's data science, whether it's just building a website, the design, the kind of interface, and the growth team as well. And it all merges together to what we believe is a very effective B2B e-commerce platform. So if we go to the next slide, what is it that Qogita does? Our goal is to fix the dysfunctional wholesale market. We actually started in 2020 as we looked at building an e-commerce business. And what we realized in building an e-commerce business is that figuring out your kind of supply was incredibly challenging, especially if you're a smaller player. And it was increasingly getting harder and harder and harder to compete against the giants in the space who managed to unlock those additional discounts, those additional cost savings, push the brands. And so we decided to go in and fix that problem by building, if we go to the next slide, Qogita.com. So Qogita.com is where we really democratize wholesale. And the way in which we do that is we bring all these catalogs and integrations into a simple web interface. You can almost think of it almost like a stock exchange. And what we want to do is enable people building either a brick and mortar store or an e-commerce business. You focus on building that perfect experience for your customers and like figure out, okay, do I want to be this kind of Korean expert website where I can guide them on the right skincare programs and leave the sourcing of the goods to us. And we do that by not just kind of creating, a simple like product database that you can see here, but really diving deep into everything that kind of can go wrong in wholesale. So it's like in the logistics, in the claims, in the product data, in the kind of like the multiple issues that can arise, and build a whole web of automations to make that really truly unlocked and fair for everyone. So yeah, we work with wholesalers, distributors, brands across the board, and we're at 8+ categories and growing very quickly. And something that we realized as we started growing was that there are a lot of things that customers expect. And one of these things was a net terms. And when you go and build net terms, you think, okay, it's not so hard. We could just offer it in the platform. We can just run a quick credit check on the customers and, it'll be a simple thing and we can get back to focusing on our business. And a lot of people expected it, but suddenly the edge cases and the nuance started piling up. And before we knew it, half of our engineering team was spent building, a sophisticated underwriting system, and then also, especially even more annoyingly, the whole like kind of dunning process and kind of adjustments, and things change constantly. The dynamics of these businesses change, so you need to be plugged in constantly 24/7. And as we said, we're targeting a gigantic space and cover a lot of markets. So this became a huge operational burden, and we did not set out to become an underwriting company. So if we go to the next slide, I believe it was Jeff Bezos who kind of coined the phrase like, "Do what makes your beer taste better." And for us, that was fixing the problems of wholesale and not kind of building, kind of more generic things that are needed to make things transact. Um, and the most important thing we could do here is spend ideally 100% of our resources tackling that problem and making sure that our customers can benefit from it in every way as possible by building great businesses as well. So we just were spending way too much time on this, and I think very much we decided, okay, enough is enough. This is not what makes our beer taste better, and so we partnered with Mondu.
Exactly. And before I elaborate a little bit more about specifically what we have done to support Qogita, maybe a little bit of an introduction into Mondu and the capabilities that we have built over the past 5 years. So Mondu is a fintech focused on B2B payments. And, there's a huge potential, obviously, and need, as Linus pointed out, in offering credit-based payment terms to business buyers. And our ambition is to make that as seamless and as frictionless in terms of the access, also at the point of sale, especially online, as those business buyers are used to it from their private life as consumers. And this may sound straightforward, but delivering this in the B2B context is actually very complex. Yeah, because you have businesses that come in different shapes or form. You have, a large variety of legal entity forms. So identification as the initial step is key and can be quite complicated across markets. Once you identified the business, you still need to authenticate also the individual, to which extent, this person belongs to the company. And then comes the whole credit assessment piece. So is the business worth basically approving a transaction that in the B2B context can go into baskets of several thousands of euros, and may even involve deviating shipping addresses if goods are sent to construction sites. So this is basically the challenge. And what we did is we basically invested a lot of resources into building a proprietary infrastructure. We have a team of about 100 people, especially in tech, product engineering, and risk management, to basically build this foundation to support a variety of B2B payment solutions dedicated to the B2B context. And in addition, we obtained an EMI license from the Dutch Central Bank, which also gives us the regulatory framework to operate our payment services across 30 plus countries within all of the EU. And in addition, we are partnering with the largest bank in the world, JP Morgan, and are also their exclusive B2B buy now pay later partner in Europe as part of their JP Morgan payments partner network. Maybe a few words on the key products that we are offering. So we do have a pay on invoice solution, which basically allows customers or business buyers to flexibly choose the terms, be it 30 days, 60 days, 90 days. And we have an installment solution which allows them to split payments up to 12 months. And both of these solutions, obviously, they are delivered real time in the checkout. They come with full fraud and default risk protection for the merchants. And as you may notice, these are more mimicking, I think, the traditional B2C methods that you've seen in the market. So at a later point, what we added, as we also experienced more use cases in the market, is the digital trade account solution. So this is a product where customers basically, they pre-onboard, they get an allocation of a purchasing power
so they know how much they can spend on a specific platform. And then there's also a consolidation of the orders. So at the end of the month, they receive a consolidated statement with all orders. They only need to make one payment at the month's end with additional, say, 15 days, while the merchants get paid basically after every order. So this is, very dedicated to B2B, where you see a lot of, frequent purchases, and a solution that we basically launched to complement the suite here. So when we first engaged with Qogita more than a year ago, these standard solutions, I think they were not fully meeting all the requirements that you guys had in mind. So there was also quite some customization needed to basically find the the right fitting payment solution for Qogita. And here I think it's important again to mention that since we have all these proprietary capabilities in-house, which are basically core capabilities that can modularly be compiled to deliver tailored solutions to merchants, we were able basically to come up and evolve basically solutions that were really fitting the use case here. So specifically what we did is we took the onboarding flow of the digital trade account, where we basically host this limit onboarding for the merchant, and disconnected the order consolidation part. So we combined it with the flexible net terms, so that buyers, they can still at the checkout select different net terms for their different purchases. So as you can see here, maybe on the screen, that's on the Qogita page. So it's basically embedded on their platform. The journey starts not in the checkout, it starts in the dedicated customer profile. So they can start the fully digital limit request, and within a few steps, they basically get a purchasing power assigned. And then they know, this is the available amount that I can spend for my purchases at Qogita. And still, if they get them to the checkout, that's a bit small here, but they still have the options to choose then for each single order 30 days, 60 days, 90 days. So it combines the purchasing power with order flexibility. Another feature is that we allowed for flexible fee allocation, so that basically, the Qogita can also pass on some of the fees for the longer durations to the buyers, which is obviously important as the intermediary platform to not absorb all the cost. And then an important piece is also the customized risk and underwriting approach, because Qogita wanted to have the solution for a very large, market coverage. So, and while we have the regulatory framework, obviously, to operate in 30+ markets, you also need to be able to do that from a buyer underwriting perspective. So you face all of these SMBs and some of the new markets. So for this, we also needed to edit new data sources to our risk engine. And we also made changes to our hybrid underwriting setup that we have with credit insurance partners. And then obviously there's a lot of day-to-day iterations on the policies and the models that we did together in order to come to a situation where we have predictable credit limits that support really these recurring orders on the Qogita platform. So that's the technical solution that we have delivered. So basically, the fast, fully digital onboarding, allowing for high, stable purchasing powers for these buyers, while basically maintaining this full flexibility at checkout to choose their terms at their preference. And William now will elaborate a little bit more about how this is used commercially at Qogita.
Yeah. In terms of having Mondu integrated, initially we thought, okay, operational burden covered, we can focus on the business. But what we quickly realized is that actually it's also a tool you can use to actually be more aggressive with your targeting, because the usage of their credit limits is an insight into the cash flow of these buyers you're working with. So the second that their limits are available again, our sales team knows to go engage, and it's like just in time, saying you clearly have the availability to kind of increase your stock again. Qogita's here for you. And then what we could really do is, it leads to like much more targeted and timely engagement, which then leads to win rates, faster closing. And it's kind of a cycle that we can just keep improving on as their businesses grow as well.
And what it's done for us, and it's been really great to see, is that it's really helped us just grow our business by focusing on what makes our beer taste better. We are rapidly kind of growing share of wallets with a lot of big customers from big to small. And yeah, the purchasing power that they have on the platform to kind of keep spending within the Qogita system really just enables us to create this flywheel of buying on Qogita makes us better, we make you a better business, and that kind of circle keeps kind of going again and again and again. And that's really thanks to a lot of the work by the Mondu team.
Right. So given these impressive numbers, I think it's fair to, call it a success story. So we also try to come up with a few key takeaways and learnings here. So maybe the first one, payments are the foundation, not just a feature. I think we mentioned this already. Obviously, merchants spend so much money attracting buyers to the platform, engage with the catalog. Yeah. So you really don't want to lose the transaction in the final step of the checkout. So making sure you have an efficient payment method, basically, that leads to the conversion is not just a nice to have feature. It's basically core to the purchasing journey. Having the right terms obviously helps to unlock purchasing power. So as William also mentioned, if you are able to communicate certain limits and high limits to customers, this typically then also allows them to buy more, so it leads to higher baskets, but it also makes them to come back more often, so it also increases purchase frequency, and it is ultimately a core booster of sales and online growth. The third point, complexity is a distraction, offloaded to experts. So yes, payments is inherently complex, especially when it comes with with credit, like in BNPL, but it must not be complicated for merchants, because there are specialist providers that really focus on solving this particular problem and basically build the capabilities to address those. And they can take off the operational burden for you. And then finally, deep integration beats surface level checkout. So what we also have seen, especially in our collaboration, is having a tech-savvy partner that brings the capabilities to integrate deep into your processes, but then also establishing a operating model that goes beyond a purely transactional relationship is really beneficial to continuously improve the payment performance, the approval rates, and so on, and ultimately create the best customer experience, but also the best business outcome. All right, so that's the end of our presentation. We wanted to leave sufficient time for Q&A. So maybe handing over to Katarina to moderate a little bit the session.